Hi there, welcome. We're going to go through the last couple of days on the S&P. We're using the S&P X, SPX, which is the physical market that the S&P trades off, the S&P futures. We prefer to use that in times where options create much of the move and the volume distribution, etc. So using NovaWave here, and you'll see, for those unfamiliar, we use a combination of Murray math, which is the lines across the screen, the multicolors, and then we use the system Ichimoku, which many people are familiar with. We have the cloud here in grey or brown. We have the Tenkan, and we have the Cajun, which is Tenkan's orange. Cajun is pink, and we have the Chico over here. Outside of that, the green line here is the 50-day moving average. We keep it pretty simple. For major moves, I look for confirmation on three things. So let's go ahead here. And the obvious thing, we're just going to look at the last 2 days, just because we had some extreme moves. The catalyst, if you recall, were one that started the fear was the latest variant from South Africa this time, which came out on Thanksgiving on a very thin market, very opportune, some would say, who wanted to influence the market. We then flowed on to the US Federal Reserve Chairman, Powell, and the Treasury Secretary Yellen before Congress. That's what caused here. So we can see there was a pretty distinct trend line there. And let me just get our line tool working for you. It's always an effort. For some reason it doesn't want to work. There we go. So you can see there was a trend break, pretty clear. So you had that option, but to try to minimize false breaks, we like to look at reasons to short. So if you look back here the day before, you had the breakdown. And what I look for is a retest of breakdowns is one of mine. We saw that immediately here, if you can see my cursor. And then we had a replication. Remember, markets are fractals. Markets are run pretty much by machines these days, 85% of moves, they estimate, as high as that are machines. We also know most people tend to just follow. So they're going to be buying up the top, selling down the bottom. It's pretty well standard. And the Chico down here can tell us, which is the blue line, whether we're oversold and overbought. We can go through that in another session on Ichimoku. Let's just go through what we got here. So on Murray math, we can see we got to the red line is 6/8, which was 8/8 at the time. It recalculated with this collapse. So we had one. We had a reversal bar up here. We had a failure. And if you want to do simple Elliott wave, which is all we do, is we had A, B down here, and then C made up of 5 waves. So we had 3 possible things. At this point, in hindsight, of course, we can see that was an ABC, but at the time, that still could have been something deeper. Then the orange line gave way. Remember what that is? That's the Tenkan. So now we've got 3 reasons to be short, or at least to exit longs, depending on your aggressive nature. Now this is a hourly chart. So we also run a daily and a 5-minute at the same time. If the 5-minute had already confirmed the sell, we're selling this. We can see it accelerated. The cloud was like butter. We went straight to the pink line, which is Cajun. We did a tiny bit of work there, as you'd expect, but it did not hold. And at this point, if we're combining everything here, right, Murray math, Ichimoku, etc. Now, here was the difficult one. So we're testing the Chico now. That's basically, think of that as a rebalancing tool. So generally, it's going to go just a percentile or something from that. This one collapsed, right? But what we got just before that up here was what we call the kiss of death, that pattern there. So we knew there was power. We then have you can do this however you choose, which chooses your style. What we did was we added when that went, we had a trailing stop all the way down. And combining the Murray math, you can see where it got to, right? So you had a minus 1/8 here, and at the time, remember I said it recalculated, so that was a higher level. We then had the green bar, we had that down in 3, but with that momentum and knowing what it was, and look where we are. We're underneath. If you want to chart the Chico, we're down here. So we're way overbalanced, we're due for a correction. From there, we close shop, end of the night. If you were long overnight, you may well have traded it. We move on to the next day, and we had a number of events. I believe in the middle of the night, this was when Bloomberg, ran a report. Some say are onerous, given there was no, what was it, one of those ones? One from sources. You know how that goes.
No,
So
you're
we
talking
had
about the Financial Times report?
And then look what we did. We held the Tenkan all night, and then bang, we broke down. We had a nice double bottom here, the same Murray math, and then through the day we rallied all through the day. We can now draw another line here for a couple of, so those who use GAN fans, you can use lines for the same effect. You just, be fairly clinical if you want, or you can just use lines. Most people, once you're at this level, you're proficient. Remember, trading is an art, not a science. Look for the fits. Some people prefer at the end of the spuds. Some people like the deep. That's as long as you're consistent, it doesn't really matter. So from there, let's look at this. A, right? B, C. We look for 3s. We look for repetition. 3's corrective. 5's directional. Here, we're watching to see if this is a developing 4 or a 1-2 to go lower. This trend line will tell us. Remember, this is an hourly. Up here, another bullish sign was, look what we have up here. For those familiar, right? We have a twist in the cloud. Okay, so that's like a magnet. So that made this a really good signal once this got going, right? So the important thing is stick to your rules, have a plan, and know your rules. And I'm going to have Alex chime in here. He was actually trading this Apple. I was having a good nap at this point. I was sleeping. But he's up here. He was trading and is familiar with what went on here in this Apple session here. So I'm going to let him take over. Do you remember that?
Talk about
Alex?
The S&P future session overnight?
Yeah, when that erroneous, as it's being called now, Bloomberg report on Apple.
Yeah, so I have a background in tech, and I know that one thing that happens a lot is we get rumors, and Apple is an especially popular company to float rumors about, and some of these rumors go nowhere, and some of them go absolutely viral. And so, you've had rumors about hardware leaks, you've had rumors about new product releases, and you've had rumors in this case about how Apple's demand for their phones were slowing, from multiple regions. And as a result, they were going to actually see a drop in their iPhone 13 sales. Now, when this hit, my initial reaction, because the story was published as one without citing any source, where the source was saying they preferred to stay anonymous, and it was from Bloomberg, who, to their credit, they put out a lot of good information, but they also have run stories that are, auspiciously very hard to prove whether they're true, and in circumstances where the veracity of the information can move markets or change how businesses make decisions. So there was an example of a story with Bloomberg where they released several articles, one after the other, after being disproven one by one, about Smart Micro and their servers apparently being backdoored by the Chinese government. And this was a complete misnomer. And in fact, there was no there was nothing like that had happened, and people tried to to push back and say, hey, this is not something that had happened. So we know that there had been these kinds of rumors in the past, and Supermicro, not Smart Micro. Supermicro is the company, but anyway, we know that these rumors have happened in the past, and they're usually involving tech companies because that's sort of the talk of the town. I mean, everything runs on tech. Tech is the center of the market, and Apple is the biggest tech company, and the market kind of trades around Apple a lot of the time. So if you can move Apple, you can move the market. So the story came out with these unsighted sources and basically said that, Apple could be in for a tough time. And this is peak Apple season. Like, everyone is doing their hardware refresh on the Apple iPhone 13. It's holiday time. There's some sales here and there. People have gift money coming in. So to hear that kind of news was really taken as being extremely bearish. And towards the lows, Apple stock was down almost 4%. And you could see the effect on futures. As soon as that news hit, it dragged futures down a little bit, and then when pre-market trading was really going, Apple really started to sell off a bit, and then when the market opened, it ran up, and then it ran down, and then it ran right back up again, and really saw a lot of strength that helped pull the market up with it. But that's one thing that's really important to remember. When we're in markets, narratives can drive price action, and sometimes those narratives aren't true. And when you realize, or when the market, more correctly put, realizes that narrative isn't true, it has to reprice as if it wasn't true again, and, start discounting that.
Right, thank you. Yes, some good points there. One, which I like very much, and I think we forget, and really we shouldn't. Any of us who trade oil are very familiar with the OPEC ones. Anyone that's American, we're all familiar with the political situation. In other words, fake news, for want of a better term, is everywhere. And look, it could be real news. We don't know, right? We don't know if some hedge fund or someone has rung up, they're trying to do a position. Don't forget, Apple, amazingly, just before this, hours before it, hit an all-time high over 170. And if you recall, that was a delta-driven run from, I think 157, wasn't it, Nick? All the way to 170, So people were caught on that. So there were people needing it. Anyway, the bottom line is the reason we use technical analysis is we don't know. So we're good traders. We look at everything. You should not just be tech. You should just not be fundamental. You should know those and also understand crowd behavior. So you also got to understand your own. You got to know how to be disciplined. You got to know how to control your own human urges to gamble or risk or get excited, or fear and greed, as what it says. So one thing I neglected to say earlier, the reason we also use Ichimoku and Murray Math is it gives us an idea of where it can go, right? So you're not just watching the tape or your P&L and, I'm up this or I'm down this. You're looking at where it can go and being cold and clinical. So I just hand you over to Nick, what he thought of this price action.
I think. Well, I don't have too much to add, but perhaps just a couple of questions. Well, firstly, and I think Alex mentioned this, but just maybe self-evident, or it may seem self-evident, but the importance of Apple towards the S&P is just it can be understated. So, that was something Alex brought up, and is indeed very relevant. So it's driving the market in many sort of respects. Maybe a question for Alex. Without sort of kind of going into too many details, but how would you, you see the sell-off, and you understand it's probably a bit overextended based on rumors, based on unsubstantiated facts. How would you position yourself in the sense of how would you manage your exposure? I mean, when would you go all in, so to speak? Would you would you start sort of adding onto the position as more information comes out? And it's quite a general question, but how do you approach these sorts of situations where there might be sort of a chance to pick up an overextended either on the up or down side, and then how do you take that forward?
Sure, that's a great question, and I think I will apply some sort of Peter Lynch type thinking to this, in that, because I'm in the tech industry and I have some insights as to how these companies run and how their products work, and also, how these news cycles tend to flow. What I would probably do in a situation like this would be to start building pre-market a share position in Apple. as it's getting discounted on the news, especially if it's a pretty significant draw. Like once it started breaking below 3%, that would be an opportunity that I would be looking at, building a share position. And then when the market opened, I would be inclined to also add to that position, but do so by buying pretty short dated, close to the money calls. And so that's what I actually ended up doing. I didn't do the share position pre-market, but I did do some close to money calls December 15th 170s. And that was pretty rewarding because as it was trading, in the market, we saw a pretty nice snapback. And we also saw, because there's no shortage of volatility, there's just a lot of pretty rapid price revisions happening in the market. So I think that's the best we can do is to sort of arbitrage what we think the truth is versus what the narrative for the reality is, or what the market is pricing as reality. And sometimes we're going to be right, and sometimes we're going to be wrong. And as long as we manage our risk well, those situations can be rewarding.
Actually,
excellent.
Very useful. Yeah, some great points here. Let's actually look at Apple itself. Bear with me 1 second, if I got to find that chart for us. So is that showing up? So there we go. So that's Apple, and we're going to make this smaller so we can actually see something. So what we see here is how I trade Apple. I'm pretty active in it, and I trade it mainly by options for a couple of reasons, which we'll go on in a bit. And so it's been a good trader for us. But you can see, as Alex and Nick just said, that one of the things is having a game plan, a pre-game plan. Now, you don't know what's going to happen. Let's be clear on this. This thing ripped up 10, ripped down 5, ripped up another 5. So it has these moves, but what you want to know is your best mathematical chance, right, of what can happen. So let's make this just a little bit bigger. So as you can see, this is all Ichimoku. And if we want to put this into context, we were actually buyers of this for other reasons, technical reasons down here. And the relevance of this is it's going to help explain what happened here. So we can see from a Murray math point of view, and this is 4 hourly, so it's nice and slow, which is you want something a little bit longer term for and let me just, why is it doing that, I asked. So you want something a little bit longer term if you're trading options, because generally you're not scalping the options. That can happen in moves like this, but this isn't typical for Apple. That's why we kind of like it. But we also trade the S&P, and as Nick said, that's a big indicator because there's like 5 stocks make up a quarter of the S&P. Anyway, we move up. We break over the cloud here. You can see the kiss of life here, right? And then it worked all its way up here, etc. Right? This, if you recall, a lot of this was to do with some manic buying on the S&P. But what happened was, in my belief, what I believe happened, and looking at the options flow and what was happening on the main contract, people had been caught short on this, using it as to sell against the S&P. And delta chasing, meaning they're short calls. It had a low vol, so therefore they were short more calls than their underlying. That changed, and it changed rapidly. You can see this. Each one of these levels, if we're to go across the page, is invariably going to be a major option strike. This happens. We correct that, right? And then we go all the way. These are all record highs, so in normal correction. And look what they're off. We won't spend too much time on this, but you can see what we just saw in the S&P. Tenkan, Cajun, patterns, 3 waves, right? We knew it was oversold here. Look how far above we are in the Chico. Then we come into this market. We have this manic run here, right? And that, again, is what we're talking about. This is what we're talking about with that delta chase. Then overnight, we close here, right at the close. So a lot of profit taking would have been taken by shorts. Some of them, longs may have averaged. Let's not speculate on that. What we do know is a close right at the Tenkan. but we only had 2 waves. So the odds were that was going to trade lower. Personally, I took profit here. That's a good move down on the short. We opened down hard. Here's that gap that Alex was talking about last night. We're talking about that Bloomberg report. So we come in flat. We see it. You can down. So the options are closed at this point. Your choice is to trade S&P or NASDAQ futures in lieu of it. Remember, it's a big part of it. Your other choice is to trade pre-market on the stocks that are open. Anyway, we get here. Look what we see, the cloud. We already know now it's getting oversold. Then it spat the green line. That's the 50. We retested this breakup level. At this point, you know you're getting oversold, but it's still free falling, right? Here you had some support. This is the area where we bought in. Right, and once the market opened, the market actually was open because you had stop loss selling here. You were able to buy 65 calls, 70 calls, 165 that is, 170 calls at very cheap. These things went up 3 times the value by the end of the day. And look where it closed, right at the tanking. And it had a few goes at it, but that's where it closed, right? That move is $6. This move here is $12. These are predictable moves as long as you're disciplined, right? So that's Apple, and you can see the guess what? We just looked at the S&P. Pretty similar pattern, right, guys? So
yeah,
Absolutely.
anything else? Any questions there, or I think
Nothing on my side, Alex. I don't know.
I think it's interesting to note that Apple is 11.7% of the NASDAQ. This one stock, and obviously it's an enormous company. It's got a very big market capitalization. So with NASDAQ being market cap weighted, it makes sense that a $2.6 trillion company would be that much of the NASDAQ. But it's still stunning and staggering to think. And then that's sort of an explanation is why the stock has its own gravity. And to some extent, the market is in orbit around it because so many of the passive flows that go into the NASDAQ and to a lesser extent, but still a significant extent, the S&P, they are going into and out of Apple. And it's going to have the sort of most pronounced impact. So, you can kind of look at Apple as a barometer for the market. If the market's healthy outside of some of the, company specific events that might be catalysts for individual stock action, Apple's typically going to be well bid. And when the market's unhealthy, outside of those exogenous catalysts, Apple's probably going to be selling off too. So it's a really interesting thing to watch for. And as the market was trading today, you could kind of see some of the buying and selling start in Apple and then work its way out to the indices.
a good point, and actually probably even more significant, which is why I have my theory on the shorts being caught on it and the delta chasing. A lot of people that's for another time too, but they tend to try to match the deltas. We had the actual stock market itself, the broader indexes, come down hard, if not collapse, particularly in the smaller caps, the Russell, the weaker stocks, if you like, in those indexes that were called growth stocks by many. A good example would be stocks held by the ARK funds, etc. They literally collapsed 20, 30, 40%. And I think a lot of them, 2 things happen, I think. A lot of people who trade tech, they watch Apple. Because as Alex has said, that's the barometer. So they were happy buying dips, more than likely. That failed because at the same time you were running into waves of selling, right? So it confused people. And I think the Apple run was also people shorting it who didn't have a futures account, for example, who knew it was. So you had a lot of conflicting flows, but it's kind of like, it was like a trick, I guess, many people, and you can look through that. Then today, what told the S&P, if it was an animal, hey, this isn't too bad because Apple's recovering and very strongly, as we pointed out, on this move. So that actually brought back the stronger components of these indexes. Some of the weak ones were still getting sold, but that was probably more margin selling or something. So it's a really good indication just how separate Apple can be. So you got to look at different entities differently, but also how powerful it is, you know. So it's a good one if you don't have to trade it, but you should watch it. If you are trading the S&P in particular, but also NASDAQ, that's a stunning number, 11%. That's a pretty influential thing. And a lot of people make the mistake of trading the Russell like the NASDAQ. The Russell isn't all tech. So
Yeah. Good, very good insights there, at least for myself, and I'm sure for the viewers as well.
Well, thanks for that. I hope everyone got something out of that, and we'll see you next time. Good luck in the markets.